Welcome to Momentum Monday. Today is January 24th, 2021. Howard.
We got the same sweatshirt on, but I was out hunting today.
Yes, for SPACs, right?
Hunting for SPACs and GameStops.
There are actually quite a few potential GameStops right now in the market.
Everything is a potential GameStop. It's 2021. It's just fantastic. My dog.
Yeah, the Wall Street Journal had an article saying that the most shorted stocks are up 25% year to date, so in just 3 weeks. So definitely, Momentum Money has been going after the highly shorted stocks. So we see something like Bed Bath and Beyond, like AMC movie theaters, like GameStop. Stocks like this have been on fire, and you know that there is a saying that stocks don't really top before the last short seller is squeezed. So we kind of starting to see that in many of those controversial high flyers. Let me share my screen.
Yeah, I think the micro caps, if we look at IWC, Ivan, you can really see. Here's the thing, people should enjoy it, but remember, these are like secularly in trouble.
Let me see.
Poorly.
This is the micro cap versus the large cap, the mega caps.
Can you hear me, Ivan?
Yeah.
I think people should remember this, though. I mean, it's easy. There's a lot of money sloshing around. There's a lot of smart kids using social media to move stocks. And we should remember that these things it's fun that GameStop went, at least from 4 to 20, but the same underlying crappy business and structural issues and bad balance sheets still exist. And this is a good reminder that when everybody's talking about these things, you still have Apple breaking out, Google breaking out, Netflix breaking out. So it's fun, but I don't care how, GameStop being at an all-time high with their financial structure is not something that excites me. But congratulations to people that played it. They're doing BlackBerry now. BB was the other one that everybody's now talking about because why not? AMC Entertainment is the Wall Street Bets kids are all over because good business. So, like I said, anything can happen, but if you're fishing for losers, sometimes they get pulled in the water. So, kudos to people doing this, but there's a lot of great companies doing great things. And we shouldn't forget that, this is a bull market. We've got incredibly low rates and we have the cloud. So if we're going to talk about big picture, I'd like to talk about the cloud still, and obviously Apple, emerging markets, 400 million millennial Chinese. So if we look at like Tencent, I think all-time highs. Wasn't it like a month ago, like we're going to not allow the stock to trade? I think people still need to pay attention to the leaders, right? GameStop and all these stocks that people are pumping in the SPACs are not leaders. There's a flavor of the year, and this is such an important, I think, breakout here. Ivan, you pulled up the China Tech versus the NASDAQ 100. You have a massive 14-year breakout in emerging markets. You have, a weak dollar, but then I'm not going to base the trade on a weak dollar, but you have Chinese markets are open. The Indian markets, is a mess, but it's a different risk profile there. Singapore is wide open. Like I said, 400 million Chinese millennials. So that's probably the most interesting setup. Microcaps look sexy, but I think the China Tech versus the NASDAQ 100 without a Trump, without kind of a Trump leaning on China, like it or not like it, that's the trade. Look at that. So that's KWEB. What is that one, Ivan?
The CQQQ, so about the same thing. And the interesting thing is that Baba is still 20% below its.
Baba's always. I remember Baba's weirdly set up. China, if you're fighting with the government, whether it's the US or China, right, it's just not good for business. And like Facebook, Baba's like Facebook, I'd rather own Baba than Facebook, to be honest. But if I was to choose one of the two, I own them both. But because I think Baba resolves itself higher because of millennials and the cloud, and the fact that you can't get Facebook or Google or Apple. You know what I mean? You can't get Facebook, Google, or Netflix in China. Those are all Chinese companies. So I think take away the fluff and the froth and the fun, the underlying, China trade, the underlying cloud trade, the underlying semiconductor trade, the underlying, Apple, all-time highs, I think, on a weekly closing high, Ivan?
Yeah, Apple, all the FANGs just erupted higher after Netflix beat expectations, which was kind of expected. The only thing that wasn't clear is how the market is going to react, and it turns out that market still loves profits. And
if we look at Netflix, because I own it, it's an 8 to 80 company. Again, is the growth going to be like it was for the last 10 years? No. But as an 8 to 80 brand, when you get a chance to buy these things down 30%, you have to remember that they have so much pricing power. Everybody doesn't think they do, but that's still the leader. Their cost of making content will continue to drop relative to the size of their audience. And only, I think, Apple can play that game at scale, right? Not even Amazon. Only Apple can play that content game at scale. Amazon's just not that core to their business. And Apple's got the phone, and so they have to be in the content business. They're already in the podcast business, so it's a pretty exciting time if you peel away even all the goofball stuff that's happening. And God bless, it's been fun to trade like some of the side stuff, but there's still a lot of great underlying action. So what are you seeing?
Yeah, it's a strong bull market. What I'm seeing is a constant sector rotation. Every single week, when we see like a couple leading sectors just pull back, just for example, last week, the biotechs had a slight pullback. Not really, but kind of digesting. Also, the semiconductors were digesting profits, and the industrial metals like steel and copper were slightly pulling back. And in the same times, we saw all the mega caps waking up and just picking up the leadership role. So every single week, the money is just rotating into a different spot in the market. It doesn't leave. So that's very bullish, and it's a characteristics of a bullish market. Obviously, from a sentiment point of view, it's a little frothy. Definitely all those highly shorted stocks running so strong. I know that's a topping behavior, but it's really hard to really.
And it's a very much a January phenomenon for years. If I watch Brian Alpha Trend, Brian has talked about it for, I don't know, since I've known him for 15 years. January is a good year for highly shorted. January is a good month for highly shorted stocks for some reason. Could this year be different? It could be a great year for, I think the IWC is, that's the interesting trend there, which is the micro caps. They can be moved. Look at that move off the lows, so, and if we go to a monthly, all that stimulus, eventually a lot of small businesses are going to start. The cloud and small businesses has not really been factored in, right? Like, how do I use DoorDash? How do I build a business around Shopify, TikTok? So that move in microcaps is probably the most interesting, I think. And with that, it's harder to pick microcap stocks because, they're not as liquid. But when they move, they move. And as you can see from the index itself, like the IWC, that move is really unbelievable and not expected. Like if we go to IWC and look at the monthly, I remember it was like, oh, they fell back into their base since 2014. I think we were all guilty of that. Value's dead. The small business is screwed, right? Like, and even I was like, McDonald's, buy the big brands, but you got paid for stepping up and marching to the micro caps. And the other thing I noticed this week too was, in a developer world, you saw Ethereum kind of catch up and doing better than Bitcoin on a relative basis. And I think that just goes to the fact that developers are building on top of Ethereum. Can you pull up an Ethereum chart? Hitting all-time highs tonight.
I'll open Ethereum chart. Let me just go to a different website.
Thanks.
And I will. And let's see, here's Ethereum.
So, I try and explain to people this is like Twilio, imagine Twilio or Agora or Plaid, all built. I mean, that's what everybody's building. If there's going to be development, the brand name and the leader in terms of a blockchain is Ethereum. There's a lot of people still don't believe in the know, and they're betting on lots of different blockchains for building, but Ethereum has the mind share of developers, and much like a Twilio, when these things skyrocket, when more developers that are building on these, adds to the exponential value. So you're hearing a lot of fluff, like people are bidding up these NBA digital trading cards, but in the end, that value all really goes to, that just helps Ethereum because that's what everybody's building the stuff on. So you see, like there's speculation and booms in, right from microcaps to mega caps. I've never seen it. In 1999, 2000, it was very much related to internet companies, FedEx and all the other companies that of the internet economy did not participate. It was very much a new economy world. This is like full on every index, even Europe is starting to show signs of strength. Now that's buying the shitty neighborhood in a shitty house in a great neighborhood kind of routine. So I'm not recommending Europe. You just got to stick with the markets. I think Asia's still the place. It's hard because you can't dig into the numbers but is anybody really looking at fundamentals? I don't know. So sorry, Ivan, I interrupted.
Well, probably not. I mean, I agree with what you're saying. There's just so much speculative money in the system that everything is going up. I mean, you have collectibles, cryptos, SPACs, clean energy, so much strength in so many different sectors. Obviously, we know it's not going to last forever, but it's really hard to time it. So why ruin a good thing and try to front run a potential 10 or 20% pullback when you can just try to ride the current trends to be much better off than try to prepare for the next correction, because you never know when it will come.
Yeah, I think what people have to be careful of the shiny object thing, where they hear their friends making so much money in a stock they didn't do work in. I mean, this is what can lead to mistakes. You got to stick to your plan. You can't match every index that's doing well all the time, but you have to kind of reassess on a monthly and quarterly basis and see what's working. I mean, what is working right now is a lot of speculative stuff, but underneath the surface, there's nothing wrong with pretty much every sector right now.
Well, anything is speculation. I mean, one can argue that paying 100 times revenue for a software stock is pure speculation. It's not smaller speculation than buying blindly a SPAC. Yeah. So there's just a lot of speculation going on in the market.
What are you focused on right now? What sector are you looking at?
So for this week, I'm kind of thinking that some of the COVID testing stocks might get back in fashion.
Are they priming? Yeah, because Israel shut down tonight. They shut down their international flights. I don't think anybody's focused on that with the new variants and a democratic.
That's what I'm thinking, that some of those diagnostic stocks might perk up again. And some of them are kind of tightening up. So I would keep an eye on those. Also, from what
I
I
saw
see.
that Lake, the one that makes the suits, had a great run. Lake.
Yes,
I
from
gave
what
up on that.
Europe now doesn't really recommend masks made out of clothes, so they recommend like N95, KN95. So maybe some of the mask stocks that were super hot might wake up. I don't know.
Okay. But they're perking.
Something that I would keep an eye on. But other than that, there's just so many setups. You know, you mentioned China. You know, the big one, the PDD, the JD. They're kind of in a tight range, so I would, you know, they could be traded, I guess, swing traded.
Yeah.
What else? The
No,
leader,
go ahead. Sorry.
sensor stocks also holding well, kind of setting up. All the highly shorted stocks, Fubo, Go. I wouldn't be surprised if Fubo clears 40. I mean, they can start to, you know, run to 50, 60 next week. 50% of Fubo TV float is short. They have a super small float of 67 million shares. So those are the type of stocks that can move a lot once they start moving, especially when you have so much of them short.
Yeah, one of my new favorites that I've been talking about PAGS for a long time, which is kind of, you know, a fintech company in Latin America that broke out. STNE continues to do well, and I've been adding to my ADYEN, ADYEY, which is kind of Stripe for businesses. Like if you know, all the Facebook and Instagram people, influencers use this. I mean, it's a Dutch company, but as Stripe prepares to either SPAC or go public, they're you know, the dips are getting bought here. And this is just, you know, forgetting valuation, just the amount of adoption of this back-end software fintech company is just unbelievable. It's one of those pipe companies that no one ever talks about, but like it's behind the scenes powering just an immense amount of volume. So, but you know, compared to PayPal, which is a, I don't know, $200 billion valuation, ADYEN,
it's 1/3 about. So
yeah, 1/3.
So it's even a quarter, 300 billion for PayPal. It's funny.
300. I remember selling some at like 200. So again, it's, you know, I'm trying to use contextual valuation when everything's overvalued, because I'm trying to, you know, figure out you know, some relative value based on market caps. Dangerous game, but it's working. But ADYEN's powering so much business transactions for developers, much like Stripe. So that's interesting. I'm trying to think what else really kind of stood out this week. But that's interesting on the COVID kind of stocks perking. There could be one more little.
I mean, I see some of them just setting up the testing and also other. To me, they look good for a swing, but we'll see. Also, I mean, obviously, the new earnings season basically just began, and over the 2 or 3 weeks, we have all the mega cap companies reporting. That'll be interesting to see.
I think Apple's reporting this week, and then you have the biotechs still cooking. So I think we'll check back in next week. I mean, listen, it's, you know, right now it's all clear. A sharp correction wouldn't surprise me, but it doesn't look like it. Like, I mean, it would have to be some kind of headline news about COVID.
Which is possible with the new strain and stuff. But at this point,
I'm saying, like, Israel who's, you know, it's as people vaccinate, as certain countries vaccinate, they want to close their airports if they're getting a control on this thing. So we could have one more of these global shutdowns as people, you know, retaliate and try and protect their own borders, because it's expensive to get a handle on this. So there's something coming that'll scare the bejesus out of people, but you know, it's hard to predict that. So you've got to just kind of manage your risk exposure, you know.
I mean, look, 10-15% pullbacks are normal. They happen every year, at least once or twice. And I would think they would be welcome as buying opportunities, considering how many stocks are super extended. And as I said, bull markets correct through sector rotation. So even if the indices don't move, they just go sideways. Some sectors can still pull back 20, 30, 40%, as you know, we're currently seeing with steel and copper and stuff like this. So it's normal.
And then just one last thing is the marijuana. I wonder if it pulled back at all, MSOS or any of these U.S. multi-state operators. No, just kind of.
You mean like
We've seen stocks like just this much acceleration and then just sideways action. You know, no pullback to the 10 days, no pullback to the 50 days, but you know, stocks are doing weird stuff here. So cannabis remains strong too. So the drug stocks remains strong. Energy is strong. Yeah. So we'll leave it there. There'll be things to worry about in the future, but right now I can't predict what's going to cause that thing. Have a great week.
All right, Hart.